Well, hello and welcome to Halftime Report. I'm Sonia Shenoy. With me are Sonal Bhutra and Mangalam Malu. Things are not looking good at all in the markets. In fact, the lowest point of trade right now, 250 points low on the index. Remember, 17,800 mark, which was, a key line in the sand on the downside that has been sort of broken. It is, of course, the Adani Group stocks and all the sentiment around it that has really hit the markets. But, just a couple of pockets that you'd want to perhaps look at. The recent low that we hit was around that 17,630 mark or so. For now, we are holding on to it. I mean, today itself, 630 was the low that we hit. Now around 17,640. So not looking good at all. The Bank Nifty is the one that's really dragging this morning. So down almost 1,050 points now on the Bank Nifty. It's a secular run on the downside. You're seeing it in the market breadth as well. 2460 stocks on the declining side. There are, of course, two big events upon us, which is the union budget and the FOMC policy next week. But it is, this whole overhang around the Adani Group stocks that perhaps is dragging the rest of the market as well. But at the moment, not looking good at all.
Oh, it isn't. Yeah.
Not looking good at all. In fact, every time, if you just take a look at the intraday chart of the Nifty, every time we made even a feeble attempt towards recovery, it was vehemently shot down by the bears. And currently, we're at the low point of trade. And you spoke about the Adani Group stocks itself. These are Nifty stocks that we're talking about. Adani and down 7.5%. Adani Ports down 12%. If you take a look at the other Adani Group stocks as well, there are big cuts that we're seeing. Total Gas down 20%, Adani Transmission down 20%. We're seeing Adani Green down 19% as well. So the broader market health not looking very good. And in fact, why just the Adani Group stocks? The quantum of declines has been so high. Case in point, something like a Dixon, which is down 19% after having fallen 30% from the highs on a miss in their numbers. Indus Towers down 12%. So it's just telling you that the sentiment of the market is extremely weak.
It is. And, even if there's a mild miss on earnings, it's a big fall that we are seeing. So definitely markets and investors not ready to take anything which is lesser than a beat or at least in line with expectations. For what it's worth, in a weak market like this, where we are seeing advanced decline ratio comfortably in favor of declines, it's at 1:6. There are pockets like Nifty Pharma, Nifty Auto and Nifty FMCG. These three sectors, at least, sectoral indices which are in the green right now. Nifty Pharma, which is the biggest gainer, 0.6% higher today. And let's talk about this and let's take this theme forward as well, because it was a big positive surprise for Dr. Reddy's this quarter. Revenues were up 27% in Q3 and the margins also saw a big 520 basis points expansion this time around. Erez Israeli, who is the CEO at Dr. Reddy's, is joining us now to discuss the earnings fine print as well. Mr. Israeli, good afternoon. Thank you so much for joining us on CNBC-TV18. This time around, well, US market performance was very strong. What led to the strong growth, and was it a one-off, and this is something which will reverse in the next quarter?
There were no one-off. We have lenalidomide sales as well as launches of a couple of good products, as well as increased market share of, let's say, commercial products. Overall, it was a kind of overall performance for us in the US market with no one-off.
And how much did Revlimid generic contribute in this particular quarter, and what is the outlook now?
It was contributed meaningfully, and we expect that tractions to continue meaningfully to contribute also in next quarters, but it may fluctuate from quarter to quarter.
And when it comes to the US, Mr. Israeli, what is it that you can guide us for estimated quarterly run rate in terms of sales, considering that you did about $350 million this quarter?
What we are saying that we will continue to grow our business. That's what we want to do also the next coming quarters and years. Normally, because of price erosion and time of product, it may fluctuate, but overall, we maintain the opinion that we'll continue to grow overall on single digit on the generic side, on the other business even double digit. And from time to time, we have products that will meaningfully contribute for a short period of time and then erode like normally happen in this kind of a business model.
Well, you saw 520 basis points margin expansion this time around, probably aided by your US business. What are you guiding in terms of margins this time around?
We reiterate our long-term strategy that we want to balance between short term return for shareholders as well as investment into the future. And we said that on average, we want to get 25% EBITDA, 25% return on capital employed, as well as double-digit growth. On a long-term basis, this is still the guidance. This year, we are doing much better than that because in the, let's say, in previous quarters, we did a bit below that. But overall, we are very much on target, and that's what we want to continue to do. We want to use the money that we have to reinvest and build more businesses, more products, more technologies. And we are happy that we are creating the means to do that.
So the India business was strong, up about 10%. Can you tell us what led to that? Because the stock is also rallying quite a bit as we speak. It's up in a falling market. What led to the growth in the India business, and is it sustainable?
It is sustainable. It's a combination of investment in meaningful products and meaningful brands. We are absolutely India is a very important market for us, as we have discussed also in the past, in which we want to bring innovation, bring a differentiated product, create services. Most of our licensing in M&As are targeted this market, as well as our organic growth. So this is very, very important product in which we are planning to be a top 5 and maybe even beyond that.
And what are your thoughts on Russia plus CIS? That's done well. Will that uptick continue?
It is. It will fluctuate from quarter to quarter. Normally, Q3 is a strong quarter in Russia because this is the timing in which we are getting the biologics biosimilar. So it's a timing of tenders as well as the winter that naturally is in Russia and Europe. But overall, we believe that Russia will continue to do well for us, and the type of brands and type of products we have and the positioning of Dr. Reddy's, we will continue to do well in Russia.
Okay, and what's the guidance like for FY24 in terms of the pipeline of launches, complex generics? What is the expectation?
The United States will continue to do well, and we are going to launch around 30 products or so, as well as to have a good traction with the current portfolio that we have. And India should do well as well. So we are doing our best to make everybody proud of us, and hopefully you and the viewers will be proud of us as well. And as for big acquisitions, we are engaging in M&As, but unlikely to have big acquisitions. Our preference is to have small targeted acquisitions that are complementary to our strategy, which are not bringing a lot of risk, but give a great way to enter or to strengthen our positioning in the spaces that we decided to play.
All right. Thank you so much for joining us today and giving us all those details. The stock is a big gainer in an otherwise weak market. We'll slip into a short break and get you more on markets and stock-specific action because a lot is happening there. Stay tuned.